Good day, everyone. My name is Adam Livingston, and I am the Bitcoin Wizard. Today, let's talk about the latest round of doomscroll-fueled hysteria in Bitcoin land. The idea that Bitcoin has been captured by institutions. You've probably seen the tweets, BlackRock owns your soul, Fidelity has hijacked the blockchain, and Larry Fink's got a private key tattooed on his forearm. Apparently, decentralization is dead, guys. Pack it up, everybody go home. This narrative usually pops up when the price is pumping and the headlines are filled with ETFs, Wall Street adoption, and billion-dollar inflows. People start imagining some secret backroom cabal of hedge fund managers all sipping $300 scotch, scheming about how they're going to bend Bitcoin to their will. They think Bitcoin is like some corporate board they can take over with a hostile buyout. But here's the thing, Bitcoin doesn't work like your favorite dystopian TV show. There's no Death Star you can blow up, no CEO you can bribe, no central committee to infiltrate. What we've got here is a decentralized, global, open-source monetary network with tens of thousands of independent nodes, miners spread across continents, and users who would rather set themselves on fire than let Larry Fink change the block size. So in this talk, we're going to dismantle the Bitcoin is captured narrative piece by piece and show why institutions might be able to buy a lot of Bitcoin, but they can't buy Bitcoin itself. They can be part of the network, but they don't run the network. And the day they try, they'll learn the same thing that every failed attacker in Bitcoin history has learned: Bitcoin doesn't negotiate. The first problem with the Bitcoin is captured narrative is that it's built on a completely wrong premise. That buying a lot of Bitcoin gives you control over Bitcoin. That's a fiat brain talking. That's how stocks work. That's how corporations work. You buy 51% of a company, and suddenly you're in the corner office firing people and changing the coffee brand. But Bitcoin doesn't care about how big your bag is. It doesn't have a voting system where your sats equal your say. This isn't a shareholder meeting, folks. You can own $1 billion worth of Bitcoin and still be absolutely powerless to change a single rule. You can't make the cap 22 million, you can't move the halving date, you can't pause the network because your yacht's Wi-Fi went down. That's because the rules are enforced by tens of thousands of independent nodes all over the planet, not a central authority. And these nodes, they don't care who you are, BlackRock, a random pleb with a Raspberry Pi in his basement, or a guy mining with a fan pointed at his laptop. The network treats everyone the same, which means the power is in the protocol, not the pockets. Now let's talk about the scary sounding phrase you all keep hearing: institutions are taking over. This is where I remind you that in Bitcoin, institutions aren't overlords, they're customers. They're just really big customers who show up to the same free market as the rest of us, plop down a fat stack of dollars and say, 1 Bitcoin, please. BlackRock, Fidelity, Strategy. Yes, they hold big piles of Bitcoin. All three companies are holding it as a result of people who want Bitcoin exposure but aren't able to buy it necessarily outright. These companies can store Bitcoin, sell Bitcoin, or send it, but they can't vote on block size. They can't move the halving date to better match their Q3 earnings call. And they can't stop you from sending Bitcoin to your cousin in El Salvador at 2 a.m. People think this is like a corporate takeover, but Bitcoin isn't a corporation. It's more like a public park with very strict physics. You can walk in with $1 billion, but you can't make gravity work differently. You can't turn off the sun. You can't decide that everyone has to play pickleball now. The rules are hard-coded, and they apply to everyone, whether you're Larry Fink or Larry from Omaha. All right, let's talk about the layer of Bitcoin that actually does the heavy lifting: mining. This is where some people get nervous and say, but what if the miners get captured? And sure, in theory, you could imagine some Bond villain scenario where every miner on Earth is bought out, threatened, or bribed. But here's the problem: Bitcoin's mining layer is basically built to punish anyone who tries to play dirty. Miners are in a constant global arms race for block rewards. ASIC. It's cutthroat capitalism with ASICs. If a miner decides to start censoring transactions or changing rules, honest miners can and will simply mine around them, scoop up the rewards, and make bank while the cheater bleeds money. The game theory is brutally simple: play fair or go broke. And then there's the geographic spread. Hash rate isn't sitting in one country waiting for a government to flip a switch. It's spread across North America, Asia, South America, Europe, and moving constantly to wherever electricity is the cheapest. Even if one region went full authoritarian and tried to control mining, the incentives instantly push hash power somewhere else, like financial whack-a-mole. And the final boss here is the difficulty adjustment. Even if some massive crackdown caused a big chunk of miners to drop offline, the network simply readjusts the difficulty and keeps running like nothing happened. It's like trying to hold a beach ball underwater. The second you let go, it pops back up. Bitcoin mining is anti-capture by design. If miners are the muscle of Bitcoin, nodes are the law. And here's the thing about Bitcoin law, it's not written by politicians, corporations, or miners. It's written in code, enforced by tens of thousands of independent node operators scattered across the globe. A lot of people misunderstand this. They think miners run Bitcoin. Nope, miners fund blocks, but nodes decide if those blocks follow the rules. If they don't, nodes simply reject them. Doesn't matter if you've got $1 billion mining farm in Texas, or if you're hashing away on a single S9 in your garage. If the miners say invalid, your block is dead on arrival. And here's the historical proof, the 2017 block size war. Some of the biggest companies in Bitcoin, backed by miners representing the majority of hash power, tried to force through a rule change. The nodes run by everyday users and PR, all steamrolled by a decentralized swarm of Raspberry Pis and stubborn nerds. The network didn't even break stride. This is why nobody can capture Bitcoin. Even if miners tried to cheat or institutions bought huge stacks, the nodes still enforce the rules. And the people running those nodes, they span every country, language, and ideology on Earth. Good luck coordinating all of them. You've got a better chance of convincing every cat on the planet to walk in a straight line. Here's the part fearmongers never seem to get. Bitcoin is anti-fragile. That means it doesn't just survive stress, it gets stronger because of it, and yes, that includes Wall Street buying in. When an institution buys Bitcoin, they're not locking it in some magical vault that gives them superpowers over the network. They're just holding an asset that can be sold to anyone, anywhere, at any time. The seconds they mess up, go bankrupt, or panic sell, those coins hit the open market and get redistributed to new holders. You don't get capture from this, you get churn. You get liquidity, and you get more distribution. And guess what? If they decide to hold it forever, that just drives up the scarcity and the value for everybody else holding the Bitcoin. Bitcoin is the game that everybody wins as long as you play. Bitcoin doesn't care about who's holding it today. The network treats all sats equally and moves them to whoever values them the most. This is why calling Wall Street's involvement a threat is missing the point. Decentralization isn't measured by who holds the coins at a snapshot in time. It's measured by how quickly and easily those coins can change hands without anyone's permission. Bitcoin makes that turnover frictionless. Institutional participation isn't capture, it's just a high-stakes game of musical chairs, and the chairs belong to everyone. So let's play this out. What would it actually take to capture Bitcoin? You'd need every miner on Earth to collude without a single one defecting for profit. You'd need every node operator, from a guy in Nairobi, Kenya running one on a laptop, to some kid in Argentina with a Raspberry Pi, to all agree to change the rules. And you'd need every single user to just give up on self-custody and let Larry Fink hold their keys. In other words, you'd need a miracle and not the good kind. The reality is, Bitcoin's decentralization is not just intact, it's thriving. It's running on tens of thousands of independent machines in dozens of jurisdictions, powered by countless people with completely different motivations, languages, and politics. And none of them can be bribed, threatened, or regulated into breaking consensus without the rest of the network simply ignoring them. Institutions can play in the game, but they don't own the game. They're price takers, not rule makers. They can accumulate coins, but they can't rewrite the code. They can show up with billions of dollars, but the network doesn't roll out a red carpet. It hands them the exact same permissionless, incorruptible rules like the rest of us. So no, Bitcoin isn't captured, it isn't even close, and the day someone actually tries, well, they'll find out what everyone before them has learned. Bitcoin doesn't bend, it doesn't break, and it definitely doesn't negotiate. And let me clear up one last thing. Bitcoin is about freedom. Those who have an issue with institutions coming for the best asset, where do you draw the line? Will you be angry at the mom and pop shop who wants to use revenues to buy Bitcoin to protect their purchasing power? What's your preferred market cap as to when you get to start your moral outrage? Is it 10 million, 50 million? 500 million? A billion? There will always be people who complain about having more, but everyone is still playing by the exact same rules. If you don't want maximum freedom for everyone, maybe Bitcoin isn't for you. My name is Adam Livingston, and I am the Bitcoin Wizard. Thank you so much for listening. Have a terrific day. Class dismissed.